if you're big enough to borrow, you're big enough to suffer the consequences when you don't pay it back.
Things don't always go to plan. We've got a loan book now of £8 billion.
Big misconception is you need your own money to do property.
We're lending £300 million a month across 1,500 loans a month. It used to be quite a dirty word. People were scared of bridging.
I was scared of it, to be fair. Like, I didn't use it for years because I thought it's expensive, it's risky. Like, they're going to take the property off me if I don't pay that. Elliot, thanks for coming on.
No
really
worries.
Appreciate it.
Thanks for having me.
First of all, give us some background on yourself.
Myself, well, so I've had a career 15 years, primarily focused in residential development, residential property sales. About just over 3 years ago, I joined Together to kind of move from resi property into funding property. Bit of a natural progression. But yeah, it's been a fantastic few years at Together. We've always been about lending on property. We're only secured against property. We're property specialists. So rather than your kind of traditional mainstream lenders and banks, we've got some real kind of property experts in the business. And it's been really fun. I've worked closely with you guys at the members club now for the past year, really solidly. And we've just got huge appetite to lend to property investors, property entrepreneurs, anything property related. We've got huge appetite for.
Nice. Do you have your own portfolio?
I've got a couple.
Yeah.
If I had more time on my hands, I would definitely do what you guys are doing.
Yeah.
But in terms of myself, yeah, couple of properties in Manchester, but
too busy funding them.
Too busy funding them. Maybe if I get some more stuff from you guys, then one day I'll grow it. But it's a small and steady portfolio.
Yeah, awesome. So you work for Together. I know Together as the biggest bridging lender.
We are the largest non-bank lender in the country. We are the largest bridging lender in the country by volume of deals. There are bridging lenders out there, down south that do, big multi-million-pound deals. But in terms of the actual volume of transactions, we're doing circa between 600 and 700 bridging loans a month. We don't just do bridging. We do other, types of loans, buy-to-lets, term loans, mortgages, commercial mortgages. But bridging is probably what we are best known for. And certainly in the low value, when I say low value, I'm talking kind of sub £500,000 kind of market. We are absolutely the largest bridging lender in that space.
100%. And I guess it's good for people to know. We'll go into, what bridging is for people that are new to it, things to look out for, fees to look out for, the costs, etc. But I guess obviously it's helpful that you're on because you work at Together being one of, I guess, the biggest in terms of volume. What is I've been to so many events with Together now, especially that auction one where it's interesting where they run through the numbers of what the loan book is, for example, like the size of the loan book and, let's say it's 600 and something deals a month, for example. How, what does that mean in lending going out the door?
Yeah, so we're a 52-year-old business. We've got one single shareholder who still comes into the office every single day, still as busy as he was 52 years ago. But we've got a loan book now of, it's just north of £8 billion. So that's £8 billion of our money out with property entrepreneurs, property investors. We're lending circa £300 million a month across 1,500 loans a month. Like I said, about 600 to 700 of that is in bridging alone, so it shows what we do elsewhere. But we are, you speak to our founder, he is 52 years into his 100-year growth plan. We want to be the most recognised non-bank lender in the country. Huge appetite to grow. We are always trying to find new investors to work with, new property professionals, people who are just starting their journeys or people who are well into their property journeys. We can really support anyone regardless of whether it's their first transaction or it's their 1,000th transaction.
One question that's a bit of a curveball would be, I guess it's aside from bridging and more of the business and the marketing of the business. I know Together and everyone in property knows Together and you know them for the events that they do. Every time you go to the office at Together, you never walk out without something, whether it's a big bar of chocolate, and it's not just a small chocolate bar, it's a branded Together massive dairy milk chocolate bar. Like what do you think makes, you're in the 50 to the 100-year growth plan, for example. But like, what has the founder, what has the team done to, I guess, market the business extremely well that you look at and go, holy shit, like that's a fucking great idea?
We're all about relationships, you know. When was the last time that anyone was able to go in to speak to their bank manager, to get an appointment, to sit down and talk about what it is that they're planning to do? You know, they're on the phone, they're trying through to a call center here, there, and everywhere. We're all about relationships. We put people at the front of everything that we do. You'll know yourself, we're always available. You can pick up the phone to me. You can drop me a WhatsApp any time of the day. We'll always get back to you. But our whole ethos is around building relationships and working together with people. And we always want our customers to feel that they can get hold of us whenever they need to, that we're at the end of the phone whenever they need us. And we will always give customers either a very quick, yes, we can do that, or sometimes it's not one that works for us, it's not one that works for the customer, but it's almost as important to get a quick no if it's not one that can be do, so you can move on and try and find an alternative solution. So, you know, putting on the events, getting some fantastic gifts, some chocolate bars, it's all about building relationships. We always want to be the first port of call for people. Whenever they've got a deal that needs looking at, pick up the phone. Elliot, is this one that we can do? Yes or no? And we'll let them know straight away.
To be fair, it works. Someone put an Instagram story on last night that was literally a picture of a bar of dairy milk in the car. I don't know whether they went to an event or your office or whatever, but it works. Like, it gets the name out there. I just think it's genius. So let's strip it back. What is bridging finance?
Quite simply, it is short-term finance. There are misconceptions about bridging. It used to be quite a dirty word. People were scared of bridging.
I was scared of it, to be fair. Like, I didn't use it for years because I thought it's expensive. Like, it's risky. Like, they're going to take the property off me if I don't pay.
If you use bridging for what it was intended to do as short term, it quite simply bridges a gap. It allows you to purchase something, potentially refurbish it, and then it's that finance that allows you to do that up until you then maybe refinance it and put it on a long-term buy-to-let mortgage. So if you use bridging for its intended purpose, which is short-term finance, monthly finance, it allows you to buy a property, own that property and have it funded whilst you're doing your works. If that takes 3, 4, 5, 6 months, and then you refinance it onto a buy-to-let mortgage once that's been done, or it just gives you the ability to buy something in and then maybe flip it and sell it straight away. It's that short-term finance. So typically it's a 12-month term. You pay the interest monthly. And as long as you are in and out within that 12-month period, it's just a tool to be able to give you the ability to do that.
Yeah. And so a lot of people that will probably watch this channel will either want to get into property or super early on. And a big misconception is you need your own money to do property. Obviously, I speak about raising finance all the time. Part of raising finance is bridging finance. Like, you're ultimately working with somebody else who provides the money.
Yeah.
What loan to values do you, I guess, lend at?
Yeah. So, you know, it depends on the deal. We can look at each deal individually. Typically, we can lend on a purchase of let's say you're buying something below market value. We can get comfortable with running our own desktop valuations. Typically, we can lend 80% of the purchase price. And that's if we're just using that one property. There's no additional security available. So we can lend 80% of the purchase price. And then, you know, the customer can put in that 20% as a deposit. There are, and I guess the question is angling on to what else we can do to be a bit more creative and a bit more inventive. So as a specialist lender, we can also take additional security. So there is potential to put no cash into a deal, none of your own cash, if you've got additional security or additional properties to put into the deal. It might be you've got a unencumbered property somewhere, you know, there's no mortgage or no debt on it. It might be that you've got a property elsewhere in your portfolio that has a small mortgage on it and there's enough equity there that we can then use that as additional security to lend 100% of purchase price. We could even do more than 100% of the property that you're purchasing to cover refurb costs, etc. if there's enough additional equity available in another property. That property could be your own home as well. You know, as long as that money is being used towards the business or towards, you know, improving or purchasing an additional property, there's lots of creative ways, and we'll always have a conversation with someone. We'll have a chat. We'll see what other bits of security they've got in the background that we can take a charge on, be it first charge or second charge if there's already a mortgage in place.
To be fair, that's something we only learned about 6 months ago, thanks to you guys. I think that's the importance as well as having a good bridging lender and a good relationship where you can pick up the phone. Because there's been many times where, we've spoke to yourself and April and, at Together, where we've come to you with the deal and you've actually gone, well, potentially you might be able to do it this way. Like, this is the way we can fund these type of deals. So obviously that we call that a capital raise.
Yeah.
So I'm buying a house for 100k and I want to spend 50. Let's say I'm all in for 160.
Yeah.
But I've got an unencumbered house at 300 grand.
Yeah.
You could just put a first charge on that house because there's no mortgage on it already, and you could essentially fund the 160
exactly
off the back of that, which is insane.
In that unencumbered property, saying it was worth, I think it's at about 300. We can basically lend up to 75% of that property can have debt on it. So we could raise between 70 and 75% of that property's value as additional funds for you to cover your purchase, cover your refurbs, and potentially go out and find other properties and put deposits down on other properties. So it's utilising additional properties. Equity is money that's sat in a property doing nothing.
It's pointless.
You might as well, if your ambition is to grow and to do more, you might as well use that equity that's held up in your portfolio or in other properties and get it working for you. Put it into other properties, put it into refurbs, get your money actually working. And as long as you are clear on your ability to exit that bridge, be it a refinance, be it a sale, you want to be in and out as quickly as possible to ultimately give you the ability to do more and more.
So what fees do Together typically charge? Because I guess in terms of the rate, it's hard to say because when people watch this podcast in a year's time, the rates will be different.
Yeah.
Like naturally.
Yeah.
But like, what are the typical fees that you'd expect from Together? Are they better or worse than other bridging lenders? Like, what's the reason for that? How does all of that work?
Yeah, look, there's different lenders out there. Different people have their own rates and fees. So we'll charge an arrangement fee originally up front. So that's just effectively deducted from the loan up front. Then there's the monthly interest rate. Again, I'm not going to quote figures because in a year's time the rates may have moved. At present, what are we in now? February 26. We're in a downward rate environment, so rates are on the way down. And then typically, as long as the loan is above £100,000, there's no exit fee on the end. So you're just effectively paying an arrangement fee up front. And then you're just paying a monthly rate of interest while you have the property. There's different ways to deal with that. You can either service the interest if there's income and affordability, so that's paying it monthly, or we can retain or deduct all of the interest up front. So we give you the gross loan, the gross 80%. We can then deduct 12 months interest up front. So you're getting, a little bit less, but then you've got no ongoing monthly payments to make. So day one, you know exactly how much you're getting, and then there's no need to pay. It might be that property's vacant, there's no cash coming in. So you just want to pay the interest in full up front. And then if you redeem that loan early, we just effectively credit you back the unused interest.
I think for people that are going to use bridging finance, obviously it's different. I think when I did my first bridge, I serviced it, so I was paying it monthly. And to be honest, it was just like, for me, I was like, why did I choose this option? Yeah. Like, it's cash flow.
Yeah.
And especially in property, like, that was a BRR project where I'm refurbing, so money's going out the door, and then more money goes out the door. Yeah. So for me, I think the retained interest works. And if you're loaning at 80% loan to value, then it's only going to knock you down to, I don't know, 75 maybe.
Yeah, exactly. So some people just like to know that it's, if they've got the cash sat there, if they've got, and especially we spoke before about additional security, if there's additional security in the deal and we can lend you, enough so that it factors in your interest payments up front. So, we just lending a slightly higher amount on the additional security to factor in the interest that we're going to be deducting up front. But different strategies work for different people. It's all about cash flow and whatever works best. And we'll look at each deal. We'll look at what income evidence someone's got. It might be that they prefer to have more cash from us up front day one to purchase the property, and they've got salaried employment on the side. They're earning money on the side from their day job. That means that they can afford to service the interest. or we can lend less on day one, deduct the interest up front, and then you know that there's no money going out throughout the term of the loan.
And one thing a lot of people say to me is, if you don't pay it back within the 12 months, on a bridge, you are done. Like, you are in big trouble. And to be fair, one of my favourite things someone said to me was, if you're big enough to borrow, if you're big enough to go out there and borrow £100,000 or £1 million of someone else's money, you're big enough to suffer the consequences when you don't pay it back. And which I think is so true. Like, people sometimes look at raising finance, whether it's a private investor or a bridge, and they just see it as like free money, which obviously it's not. It's someone else's hard-earned money. So, like, how does Together deal with the fact that, I guess relationships is probably the answer, right? But how do you deal with the fact if someone's at month 11, for example, and they know they're not going to be able to pay the bridge because a refinance is stuck or a sale is stuck? Like, how does Together deal with that situation?
No two deals are the same. No two customers are the same. Everyone's got their own circumstances and their own issues. If every single deal we funded went exactly how it was intended to go at the very start, everyone would be absolutely smashing it, but property isn't a perfect world.
It's investment.
It's investment.
It's literally investing.
There are risks. There are things that can go wrong. There are things that you didn't quite, understand, or things that you couldn't predict when you borrowed the money, when you agreed to do the deal at the start. What I always say to everyone, it's back to the point about relationships. Be open and honest with us as soon as possible. There are always things that we can do. We're in the business of lending money. We only make money if we're lending money. We're not in the game. There is absolutely no scenario where we want to repossess a property, where we want to, get involved. It's messy, it's troublesome, it's costly to try and, repossess and recover property. So we don't want to be in that game. What I always say to every customer, like I said, if there's a problem, let us know sooner rather than later. There is always a solution. There is always something we can try and work to help the customer, to make sure that there are their capital isn't at ultimate risk. What we don't like is someone just burying their head in the sand, coming up to us on the end of month 11 and saying, "Oh yeah, by the way, I've not been able to refinance this. I've not been able to sell it." Then that kind of puts a bit of fear in us as a lender 100%. In terms of how trustworthy is this person. They've not told us their issues. If someone lets us know as soon as they think there's an issue, or if they're struggling if their plan was to flip it, to refurb it and sell it, or just to sell it straight away, and the resale market's not been there, or they've bought a property in an area that there's not been as much interest, let us know. It might be that, we decide to put it onto a long-term buy-to-let mortgage for them, rather than just keeping it on a bridge. Because if you get past month 12 on a bridge and you're still then it becomes expensive. So it might be that the best solution is to put it onto a buy-to-let mortgage. Maybe just put it onto a variable mortgage, put it onto a fixed-term mortgage for 2 years fix, 5-year fix, just to give you some more breathing space to do something. But we do that loads. We do loads of fund the bridge. People then think that they can go and find a mainstream lender to put it on a buy-to-let mortgage. If it's a quirky property, if it's a as the mainstream lenders see, an unmortgageable property, they might have challenges. So come to us. We can always look at putting it onto a term loan. But like I said at the start, let us know as 100%. Soon as you think there's an issue.
I think as an investor as well, like, that should be the forefront of your mind anyway. Like, very fucking quickly. If after 6 months' time, you will sit there and be like, shit.
We want to be funding partners. We want to, we're invested in this deal with you. So look at it as we're JV partners. We're partners with what you're doing. If there's issues, let us know and we'll find a solution. And
Together's, is it the main tagline? Common sense lending.
Common sense lending. Working together to make things happen. We're all. You'll see it. You come to you've been to our offices before. You'll see common sense is written all over the place. It's our mantra. We're not a tick box lender. We're not, a computer says no type of lender. Like I said before, we're 100% privately owned. So we're trying to grow. We're trying to do more. We will always try and find ways to lend money rather than saying, actually, it's not one for us. We're entrepreneurial. If we like the customer, if we like the deal, if we like the property, And especially, I think the stuff you guys do and the stuff that your members do, it's all typically low value residential stock. It's what we call 9-to-5 assets.
Yeah.
We love lending on 9-to-5 assets because it's such low risk. Whether it's a 2-bed terrace, 3-bed semi, there will never be enough housing in this country to satisfy the demand that there is from renters, from tenants, from people. We're an island nation. We've got limited land to build on. So if you're buying a 9-to-5 Monday to Friday asset, we'll always find a way to be creative and lend on it. If it's a bit quirky, I've seen some really quirky deals. We do quirky deals as a lender, but on 9-to-5 Monday to Friday assets, we'll lend on them all day every week.
100%. One of the reasons I obviously like working with Together is it's common sense lending. And I guess one of the benefits is that you're not just a bridging lender. There's also opportunities for, let's say a deal's tough, or it's a quirky property, for example. I could easily just give you a call and say, can we just roll it onto a term product? And I can just rent it out as a buy-to-let. And a lot of the main banks might not lend on that because it's a quirky property or whatever it is. But then also the benefit of Together is a lot of bridging lenders won't then offer the term product. So then it might end up being that you need to pay a broker fee, for example, to go to a bank or to even go to Together, for example. So like, how does that work at Together?
We've got a really wide product set. So we're not just bridging lenders. Bridging is a huge part of the business in terms of what we do, but we're also big into buy-to-let. We've got commercial mortgages. We've even got a regulated side of the business that does personal finance and homeowner mortgages. So the amount of times we will have done a deal at the start, we'll have done the initial bridge, and then for whatever reason, we're not a mainstream bank. We're not a mainstream lender, so our buy-to-let rates are higher than you might be able to find elsewhere, but we'll get the deal done. We'll do it. So sometimes people will just prefer that peace of mind knowing that they've got that exit from the bridge, sorted at the start. They've got a buy-to-let option there with us. We will never fall out with someone if someone takes that deal elsewhere and refinances. We appreciate that this is ultimately people's investments. It's their businesses. If they can get more money from a different lender, or if they can get cheaper money from a different lender, absolutely go and do it. It's what you do, whatever works best for you. But if you're then spending a load of time and you're getting knocked back, or you're realizing that a buy-to-let mortgage with a mainstream lender, they're asking for your inside leg measurement, they're asking for all this information. We've already got a loan on the property. We've already lent to you as a customer. We've lent on that property. We know the deal. We understand it. We can very quickly and very easily put it onto a term loan and just give you we do buy-to-lets up to 30 years. We've got interest only. We've got capital and repayment options. We'll let you know very quickly what we can do and how quickly it will take to terminate the bridge and put it onto a term.
It's how simple like Together is. It sounds like one big sales pitch for Together Finance, but like honestly, people that watch this video, I don't know why you'd use another lender personally, because it's so simple. I can pick the phone up to you. I can send you an address, and you will tell me within minutes how much you can lend me. And you'll, if I say sounds good, you'll literally send across the terms straight away. And you can fund deals in, a lot of bridging lenders will take a while to fund deals. You can fund deals in 24, 48 hours if the relationship is there. The first time we deal with a customer, we'll do a lot of due diligence. Then we'll do a lot of work. The first time we deal with someone, it might take a bit longer, but we will always strive to complete on whatever completion date you've got agreed with the vendor. We have done loans in 24 hours. We've done loans in less than 24 hours from application through to funding. It depends on the ability and the workload and the capacity of the solicitors involved. If you're trying to complete a deal in less than 24 hours on the last day of the month, it might be a bit of a challenge. But there's always ways, and we'll always find, ways to do it. We work closely with you guys. We know a lot of your members. We've done loads of business with the members club and its members. And I feel like we've got a really slick and efficient process now in terms of, like you said, call us up. This is the address. We can tell you what it's worth, how much we can lend on it. And
put you in the put you or put one of your members in a position that, okay, fine, I've got agreed terms. Let's get the ball rolling. Let's agree a date and let's get it completed.
100%. And what would you say is the biggest misconception about bridging finance?
Biggest misconception is it's high risk, it's expensive. It's only those things if you don't use bridging finance for its intended purpose, which is to be on it for as short a time as possible, and to, only ultimately you want to be on it as short a time as possible and not run the risk of, like I said, getting past month 12. It gives you the ability to be in just as strong a position as a cash buyer in a transaction, in terms of we can turn it round in the same timeframes that a cash buyer could agree to purchase a deal. We always say to everyone, just before you commit, before you sign up, before you sign on the dotted line, be clear on what your exit is going to be. Have that exit strategy in mind. And look, like I said before, things don't always go to plan. Things in property come up that are unexpected. But if they do, if those things come up and unexpected things happen, let us know, and we'll talk through what we can do to support.
For someone who's never done a bridge before, I think probably borrowing the money is scary, or it can be. And it probably should be, because borrowing someone else's money. But what is the process from start to finish? So, like, I needed, I'm buying a house for 100k.
Yeah.
You're probably going to give me 80k minus the retained interest, for example. What's the process like for someone that's brand new who's just like, I need to get a bridge on this property? What's the A to Z with together?
Pick up the phone to us, have a conversation with us. We'll run through the property details. We'll run a valuation there and then to check that, our desktop parameters are in line with your purchase price, and we can ensure that it is being sourced and purchased, effectively below market value. We'll assess the property. We'll get, once we're comfortable with the property, comfortable with you as a borrower, it's the first time that you're doing this, so your experience isn't there. But again, if the deal's been well sourced, we know a huge number of sources that are providing deals to the market. We know a huge number of platforms where people are picking deals up from. We will then get all the information that we need from the customer day one. So a simple application form that just gives all the details of either you're buying it in your personal name or if you're buying it through a limited company. We just get all that information on day one. We get the deal then within 24 hours into our underwriting team. They'll assess, they'll look into the background of the borrower. They'll run a credit search on the borrower, just check that everything checks out. Assuming that it does, we'll get all of our loan documents and loan agreements over to the solicitors within 24 to 48 hours. Your solicitor will have the legal pack, and then it's just a case of you working with your solicitor, getting the documents signed, getting the agreements all understood. If it's your very first time that you're borrowing money, you might need to get independent legal advice. Just make sure that you understand what you're signing up to. Yep. We don't want people who haven't borrowed money before, who haven't been on a bridge before, getting in something that they aren't clear on. So that independent legal advice is important. And then once we've got all the documents back from the solicitor completed and in line with what we need, we can get funds released.
One of the biggest misconceptions that I always see is people think that you can't borrow money if you're a first-time investor. Do you look at people's individual circumstances, i.e. how much money they earn in the job, whatever that is, if they've had CCJs in the past, etc., or do you only look at the individual property that they're buying and think, this house is worth 100, we're going to lend 75, 80, we're happy with that? Yeah. How does that work?
Look, it's the most important thing is the deal, the property that we're lending on. LTV is really important to us, especially on simple residential stock. Then the property is really important. But we're also lending partners. Like I said before, we see it as a joint venture. Yes, we do look at a customer, a borrower. We want to look at how much if we're in the risk game. Well, as a lender, we're in the risk game. So we try to mitigate risk where possible. So if someone has got CCJs in the background, that's fine. We can still lend someone with CCJs or impaired credit. Is there an explanation? Is there something rational? Did you move abroad for it? In fact, we had one recently where someone's moved abroad for a couple of years. They their affairs weren't being managed properly back in the UK, and they missed some payments. They had contracts, credit cards and things that they didn't realise hadn't been paid off or closed down. They were uncontactable whilst they were abroad. When they came back, they realised they settled all these debts and they cleared them off. So, we can lend to people, and we do regularly lend to people with impaired credit, with less than perfect, credit profiles. If there's things that can't be explained, if there's issues in the background that we can't get comfortable with, we will assess each and every deal on its own individual merits. We'll assess each individual borrower. If someone has got a great job, salaried income, we'll get comfortable really, really quickly.
Yeah.
If someone is trying to service the interest and they haven't necessarily got stable salary or income, it might be that we just retain the interest up front because we need less financial information from a customer if we're retaining, if we're deducting the interest. But we can, and we regularly do, get comfortable with customers who might feel that they're not the best profile of borrower, because we take such an important look at the property itself. And if it's a 9-to-5 asset, if we're low LTV, then we can generally get comfortable by having a conversation. Never hide anything from your lender.
100%.
We've got all sorts of systems in the background, and we do all sorts of checks on borrowers and people. If there's something in the background, let us know, because again, it shows honesty. It shows that you're wanting to get into a partnership with someone. If you're burying something, if you're trying to hide something, and we find out about it, it doesn't paint a good picture in terms of building that relationship and being a trusted lending partner.
It's all relationships again.
Yeah.
Even when you're trying to get like a car, for example, on through the business, like a lot of the time what will happen is you'll put your application in, and so many times we have so many companies, and especially in properties, commercial lenders, they'll look at it as some form of risk, and they'll say, oh my god, there's so much debt in this company because of mortgages or whatever, and they'll just automatically decline it and be like, it's not for us. Whereas if you have CCJs, if you have bad credit or whatever it is, at least you can pick the phone up to someone like yourself and be like, this is what it is. I missed some phone payments 5 years ago. Didn't know about it. I can clear it off. Yeah. Whatever it is. Again, it's common sense.
Absolutely. Common sense. You said it time and time again. Just lay all the facts, all the information out in front of us. If there is, most customers we lend money to, it's a very quick decision, and decision in principle, very, very quickly done up front. For those people that have got issues in the background, just pick up the phone, talk it through us, tell us what your plan is to remedy if there's an issue, and we'll be able to tell you very quickly if it's something we can get comfortable with.
Awesome. Well, any final message for anyone else? Anything that they need to know about bridging? I think we've covered a lot, and I think it's been super helpful.
It's been good. Look, bridging, I think we've been talking now for around about half an hour now. Hopefully that gives you the confidence, if you've been sat on the fence, if you're not sure of what it involves, hopefully that gives you the confidence now to ask questions. We are always available to pick up the phone and talk it through. You can get our details very, very easily online through yourself, through any of your partners. And if there's ever any questions, drop me a WhatsApp, drop me an email, pick up the phone and have a conversation. And I'd love to tell you more in person.
100%. Appreciate it. Thanks,
no worries. Thanks a lot. Good to chat.